My name is Mackenzie Kester, and my presentation is on the history of goodwill in accounting. Goodwill is an intangible asset that represents the future economic benefits arising from other assets acquired in a business combination or an acquisition by a not-for-profit entity that are not individually identified and separately recognized. Business combinations are when an acquirer takes control of another business, as seen in mergers and acquisitions. An excess between the value of a company's assets and liabilities creates the goodwill account. As you can see in the journal entry, assets are debited, liabilities are credited along with the purchase price. The excess is reported as goodwill, therefore balancing the journal entry. Goodwill has been used since 1944 when an accounting research bulletin was issued. In this, it allowed the following approaches in the subsequent accounting for goodwill: permanent retention as an asset, amortizing against earnings, retained earnings, or additional paid-in capital, and an immediate charge against retained earnings or additional paid-in capital. Then, in 1953, another accounting research bulletin was released, but this time by the Committee on Accounting Procedure. This disallowed companies from writing off goodwill since this was becoming a pattern. The next change came in 1970 by the Accounting Principles Board, which made companies amortize goodwill on a straight-line basis over 40 years. But if the company could show how another method was superior, then that could replace it. After the FASB, also known as the Financial Accounting Standard Board, replaced the Accounting Principles Board, they were under pressure to make a complete change for goodwill. This resulted in the Statement on Financial Accounting Standard number 142, which was released in 2001 and is how goodwill is approached now. The latest change regarding goodwill is how it is to be measured. Like stated in 2001, the FASB changed the codification on how to measure goodwill. According to this codification, goodwill shall be tested for impairment at a level of reporting, referred to as a reporting unit. Impairment occurs when the amount of goodwill carried over is more than the fair value or the estimated value, therefore no longer allowing goodwill to be amortized and is now tested for impairment. Another important fact on the history of goodwill is that the value of goodwill on businesses' financial statements reached a decade high. This was a result of the 2020 pandemic, although this did not surpass the value of goodwill when the 2008 recession occurred.